Hello, everyone. Welcome back to the RashInvestor.com's Daily Brief Recap. Woohoo, party! Let's see. It is where are we? It's Tuesday, man. This summer, 2020, has been the summer of the dentist for Brian. I've literally had to go to like 10 different dentist appointments here over the past couple months, and I got another one today. But hopefully, this is my final one. And of course, what a great note to leave the summer of 2020. But hey, it's got to be done. Long overdue. I let things slide there a little bit. So anyway, we do have a TRI SOF meeting tonight, but I've been a bit MIA over the summer here because of all these silly dentist appointments, and the guy's only in the office Tuesday. So my apologies to anybody watching this video in the TRI SOF club tonight. And Zach, I will probably be a little bit punch drunk again this evening, but it's been lots of fun making fun of Brian when he's all drugged up, when I do pop into the meeting. Anyway, where am I going with all this? End of the summer. We actually have the Jackson Hole Symposium of Central Bankers all meeting right now. So I do believe that they had an agenda to take the currencies into a certain level there ahead of this event. And I'm hearing a lot of chatter out of market participants that they're sort of on pause while the central bankers all do their thing, just in case they happen to have any bombshells that they want to drop, new policy, that kind of stuff through this symposium. So with that said, and also to end of summer, most of the professionals in this business are not really at their desk right now. Over the next week or two, we will be hearing more and more of the pros coming back to the office. And we'll probably start to get a little bit more direction of trend. It's a little concerning, of course, because the market is set up quite nosebleedy now. And from what I understand, there is lots of chatter right now about people getting reinfected with this COVID disease after they've been already recovered from having it one time. So a little bit leery that we might have a pretty tough fall here. Cases, of course, are still on the rise, and now vaccine hopes seem to have been a bit dashed here, thinking that we could just put the kibosh on this thing. It is interesting when we look at our breadth indicator. The broader market really hasn't been that happy since about the end of July, beginning of August. We do have a few sort of darlings, and now they've gone and shaken up the Dow Jones Industrial Index. So more darlings of late are being added to these indexes that kind of don't really reflect the real economy. But nonetheless, the Fugazi goes on. And I've often suggested people there's no reason to buy a mutual fund if you can just go and buy the DIA trust, because they will just make guarantee that that index will always go up. As soon as anything underperforms, out it goes, and go grab a new darling, and boom, you got guaranteed rise only market. How convenient. Anyway, that's another conversation for another day, I suppose. Point I would just make is if you look at a lot of the smaller stocks, and think of Mr. Barstool guy, he's getting really beat up right now. This is sort of the general market state. But at the same time, too, you can see our fast indicator is now actually officially in the oversold camp. So this is the kind of environment where it's probably too late to sell, but probably still too early to buy. And we're going to go through this sort of drift right now as people sort of get themselves positioned and squared up for the coming September whatever. And keep in mind, we've got a big political event coming up in early November in the United States of America. Of course, we've got the fall flu season coming up here. So it's going to be a challenging few months here ahead of us. There's no doubt about that. Trying to look at your matrix here and have some sort of coherent message for you here today. Always a challenge. As we had sort of said a moment ago, I get the feeling that they've sort of priced in a US dollar index move, A, B, C, Ds into objective levels. Of course, public comes in, sells here. Absolutely wrong thing to do. and they just back it up, and now we're in that Fed symposium. It's not really the best looking short location anyway. I guess what I'm a little worried about is we still have these chaos levels floating out down below. 78.6 off of the entire range on the US dollar, and the original double bottom is also just a little bit below. So I certainly can't call a bottom here, and I wouldn't be surprised if over the next 2 or 3 months we actually find that cyclic bottom in the US dollar as we go through this political event. It feels like that's what needs to happen. Keep in mind when Mr. Obama first took office, we did sort of like a end of the November event. Then we had sort of a relief rally, and then there was one more dump into the early new year. That formed the bottom, and then away we go. So I wouldn't be surprised if this is what our sort of next 6 months looks like. Keep in mind, this is sort of like the confidence in the financial system. And if it looks like this, what do you think gold's going to do through that kind of environment? And believe it or not, I still think gold works its way higher through that Jupiter-Saturn cross as this thing finds its footing here over the next 4 or 5 months. You want to try and call a top or a bottom in this? Good luck. I don't really, like going to war with central bankers is often very dangerous for the public. I think we're probably best, if you're a gold bug, great, fine, hunt long entries. Be careful. You saw how easily the public got burned there a week or so ago. Wait for consolidations, wait for W's, all that kind of fun stuff, and then go and risk your hard-earned money. At least when you do buy off at W's, you've got at least a identifiable risk window. If you just go and blindly buy and sell the market, you really don't know what your risk windows are, and potentially that could turn into disaster. So with the Jackson Hole Symposium going on and the US dollar trying to find some sort of footing, and it looks like we're just about the middle of this recent trading range, I don't think it's really necessarily a big risk on or risk off, and I can kind of see stocks are kind of floundering here today. I did notice, of course, we have hit things like chaos levels, so don't be surprised if we see some chaos come in here. Wouldn't surprise me one bit. It's interesting, from a risk-on perspective, fascinating to see what they're doing with the oil market these days. I did see there was a news release about oil that caught my attention, but it seemed a little bit outlandish. I can't remember exactly what it is off the top of my head. Kevin, are you trying to message me, or is somebody else hollering at me on the side? I keep hearing the blings going off.
Not me.
All right, cool.
No, if I wanted to talk to you, I'd just interrupt you in the middle of your show.
That's good. I always like that. So anyway, point of the matter here is as long as these guys are pushing this higher here, it feels like a risk-on-y type environment. We had sort of talked to you guys recently. We're going to just keep hunting for these setups to get short. And how many short setups is it going to take? You can see how we potentially had an interesting that conversation about clotheslines again. Do they take this thing to another clothesline high? Could be. Oh yeah, there's 2 hurricanes churning around in the Gulf of Mexico right now. So if I understand correctly, a big part of this rally, I just remembered right now, is all about these hurricanes and what they're going to do to Gulf of Mexico potential production issues. So, it certainly hasn't rolled over yet. And fascinating how Kevin does a presentation on the site. On Tuesdays, he was telling us about another oil stock he likes down in here. Boo! His boo. But hey, the good part about a guy like Kevin, you heard him there just a moment ago, he wants to make money from trading. So he doesn't really have any opinions. Brian, your opinions are worth as much as you think your opinions are worth. I'm just here to make money from trading. So, hats off, Kevin. If you keep making more money on the long side in the oil market, awesome. Interesting, ExxonMobil, of all names, like one of the biggest, bluest chip names you could ever find in the U.S. economy. the industrial military. Remember, everybody's like, well, the oil industry controls the car industry, which controls the populace. Well, I can tell you that story's over. Something like the Exxon Mobil, basically a stalwart of American capitalism for the entire 20th century, so they're kissing it goodbye from the Dow. That if there isn't more writing on the walls about the oil industry going forward, I don't know what there is. So anyway, it is what it is. Interesting what they're doing to the oil price itself, and of course there is no trade for me here, so we'll just keep watching it. One of these days, an M will come in, and we'll show you how to trade M's for moves back to 50% levels, but it ain't here now. On the flip side, of course, bonds still coming off. A lot of conjecture right now that the Fed is going to change the language and they're going to insist on inflation. And if that's the case, then you're going to see these bonds come down. Ironically enough, though, the conversation really hasn't changed a hell of a lot over the past 3 or 4 months. It's just been a big hurry up and go sideways. I suppose if the stock market does break in earnest, we're probably going to see the bonds ratchet higher. And frankly speaking, I don't know which way this is going to go. What I did say was we would take a look at the straddle trade, buying the out-of-the-money call and put options, and just see what the math came to at the end of this when we finally do hit one of these objectives. But I can tell you, the one thing that kills options traders is time. So the longer it takes for this to happen, the less profit there's going to be, obviously. So just more hurry up and go sideways. And this thing will break when it breaks. And until it breaks, it's still a channel. Interesting from the gold market perspective. Remember I told you the other day, they can break hearts really easily in these kind of speculative commodities. And I think the silver's even worse. So be careful here, people. I often suggest people that try not to chase, let a consolidation happen. We start painting, 3 higher highs and 3 higher lows, I can start getting bullish again. But until then, it's a big hurry up and do nothing. And what I would also say too is let's watch for how the Jackson Hole Symposium after it finishes. So you might see a whole bunch of moving around here. I see the coins moving all around here. But until the symposium is finished, I don't know whether I would believe too much in price action. Just be careful, low liquidity. A lot of major players are just standing on the sidelines right now. Could you see a nice little fing here? Sure, wouldn't surprise me one bit. In fact, probably now we can realistically actually start drawing bearish A, B, C, D objectives, which of course will piss the gold bugs off to no end. So, what a surprise. Back down to fill in these gaps. The original, actually not original, but the most recent market structure breakout. Clean up all of this open air. That would take us down to about 1800 or so. It's not out of the question whatsoever. So, until we really get a W on the other side of this trend line, I'm not really in a big hurry. But really what I want to see for me to get bullish is something that looks like this. So, big hurry up and do nothing. And if anything, if you're a bull, you kind of want them to clean all this up before the Labor Day weekend. Put in a base. Everybody comes back from summer vacation, sees the base in gold, and they all go piling in on the long side. Thing about risk on, risk off, that breadth indicator kind of message. What's the broader market doing? Keep in mind, Russell 2000 versus the Dow. This is 2,000 stocks versus 30 stocks. So you can clearly see the breadth of the market of the Russell 2000 relative to those big 30 stocks is not happy. And, as the breadth indicator showed you, it's all the same message. The broader market's just on pause right now. I was interested. Yesterday there was some talk about vaccines, and like I said when I started off the video here, now people are saying these vaccines, don't get too excited about it. So it was interesting to see all the travel stocks and leisure stocks all sort of catch a bid and work their way higher, wondering whether they were going to break out and form big honkin' W's. I was willing to buy some of this cruise line stock on the breakout, but you can see the market clearly has rejected that. Now, if we settle down and we turn right back up through the highs here, well, that's going to make a nice little cup and handle. So I'll still buy that on a stop, and if anything, I kind of like that better. If, however, we come down, we actually M out and break these lows, then I'll probably just go on pause and just watch. But for the time being, if they can tick this market back up through the highs, and there's more talk of vaccines sort of solving the problems, you might find that a bid comes back in on these cruise stocks. But for the time being, there's nothing for me to do here. Heading on over to crypto, kind of feels like crypto's pretty heavy here, folks. Just looking at this chart alone, and Kevin even mentioned this in sort of his commentary today. This feels very sort of head and shoulders-y kind of thinking. What I was sort of suggesting to him is each time we come into one of these battle zones, you're probably going to see a fight. So what ends up happening is we come into a zone, kind of like here, you see that, and there's a fight. And then there's a pullback away. Then we come into the zone again, and if these lows are lost, then we're probably going to play with these lows. And we're probably going to see something like a dip against these lows and then a fight back. Right? And then we'll come down, and if we lose these lows in earnest, then, oh boy, look left, we could fall an awfully long way. So, be forewarned. And I think this was pretty, clear message to the public. This thing's not cheap right now. It's starting to get expensive. So, we did lots of studies, especially through that last cycle where we sort of figured $2,000-$3,000 was a good cost of production. So what a surprise. Market bottomed off at $2,000-$3,000. And actually $3,000-$4,000, really. Then after the halvening event, which is here, this number doubles to, and this is with the market base, but if we use that $2,000-$3,000, then we have to think $4,000 to $6,000. So what a surprise. Market basically held around $4,000 or $5,000, kind of thinking, I get the impression that this was sort of it going on special following this halvening event. So now what ends up happening is, gee whiz, reload zones are going to be somewhere between about $5,000 and $7,000, which, on the math basis is basically, $6,000 is that double what that top was there. So, if I was thinking value, I'd be thinking down in these green boxes down here. Same message, nothing's really changed. You can play the market up top here. We talked about lower time frame setups, but just understand, if you actually look at things like price momentum off of the daily charts and stuff, this is not bullish. This is very, very, very not bullish. The only thing that's sort of a saving grace, which sort of leads me to believe that these wicks and tails are just being played with right now, is the fact that the sellers aren't really coming in aggressively here. This feels like more sort of trading range. And I got a funny feeling we're probably going to play at this big honking green-yellow line here. Again, you can see how we sort of oscillate around it many times. We're probably going to do the exact same thing on the other side. But, kind of like what I showed you before, we lose this area in earnest. Look left. That's an awful long drop all the way down to this key support. So be forewarned. It sucks, but it's there. We have a general rule at TRI. If you are a bull, fine. It's okay to be a bull. But if you see confirmed bearish divergences here, especially on things like RSI, you're best just to cool your jets. And I think that's exactly what you got to do, is you just got to cool your jets and wait for this to find some sort of bottom in here. And just, eyeballing this, to me, this looks like A, B, C, D, which, gee whiz, take us right back into these tails. Wicks and tails like to be eaten. Candle body lows for trade location. You can kind of see how they're sort of setting all this up now. So if we go A to B, see how simple that is? And then we go C to D. Yeah, there you go. So paints a nice target. Gee whiz, what a surprise. Probably going to have some sort of fight around 10,500 area. That would be a nice psychological level. And that's also previous breakout levels. Yeah, you can see the old high here. Think Wyckoff check. That A, B, C, D into these tails just takes us down, and we just check the old high there. Come back, test value high. Not a big surprise. Sort of business as usual. Unfortunately, that does mean as we're doing this, that probably altcoin's probably going to take a bit of a pause. We had talked lots, with Kevin in the video today about, I had put tweets out, the spreads, not very happy. I don't see any reason for the spreads here to tell us to expect up, so not really looking for big rallies. But what I wanted to mention was, but I don't know where the hell the damn chart is. Again, this is that if you see all these bear divs and you're a bull, what are you best to do? You better cool your jets. So you can see that's just playing itself out. But Kevin had made such a great comment today, and I have to say, I really like the thinking. Over here. I mean, just look at this chart, people. Has this come maybe a little bit of a ways? I mean, if we just put this, just reload zones off of this shit perp index, at some point we probably need to come right back in. Interesting how this is this original fight level that I seem to have highlighted here. 78.6 all the way down at the original weekly double bottom breakout level there. So, it was a bit risky. There are some names that I am interested in. I'm trying to buy this Geo. So I hope they let me give me a fill on this one. But hopefully you can see this has come back down against its reload zone after confirming a big old W. That's the kind of shit I want to buy. When I see a market go like this, and this is the whole altcoin market, I can't buy that up there. I got to wait for it to come back down to here, just like you're seeing. Check this out. The only problem is, I like the damn asset so much, but I can't get fills. They won't sell me goddamn Geos down here, you bastards. So it's kind of funny, trader's life. The stuff I want to buy, I can't get filled. If I wanted to buy some of this, you could get all that you wanted. So, there's a difference between something I don't want to buy, don't touch, don't chase, and something that is buyable. And the reason why I'm mentioning this today, sometimes in the past, I would tout an idea, and if I pound the table hard enough, I could actually get the algos to take the other side of the trade, and they would sell it a bit, because of sort of those algos. If the public's thinking about something, then they must be wrong. So if I'm really lucky, we can actually get the algos to go negative here, and maybe if crypto really falls out of bed, I can get some selling in here so I can actually get my goddamn fills. So, there's the difference. The public's in here, Brian's in here. Hopefully you can see the difference in the way that we approach the market. All right, well, there's kind of a fun rant for you today. Sure hope you enjoyed the offering. Be careful here. Probably best to wait for Fed symposiums to get done. Don't chase. Trade your setups. If the setup happens to come in, then you got to take the goddamn setup. But if they don't come in, just don't do nothing. And, of course, work your orders at your levels. And don't compromise, right? You have your level, pick your level, stick to your level. If they don't want to sell you at the price that you want to buy it at, well, then too bad. All right, I should shut the hell up now. Have yourselves a great day, everybody. All the best, and bye. Oh, wait a minute. Well, crap! Stop. Excuse me. All right, quick reference, quick note. I was actually quite pleased to see all the people posting that they'd like to be involved in the raffle. So great to see the PMA there. Remember, if you want to see it in the raffle, you got to also post something that you've learned out of these videos. I want to see that you're actually trying to learn. So keep posting those requests to be added to the raffle. If you have posted, then you don't need to post a second time. That's just a waste. And it's also going to make Kevin's job a lot harder. So, oh, by the way, Kevin, I just volunteered you to keep track of that, okay? And he's happy with that. Okay, so that's fine. So, the point being that great to see lots of feedback. All you marketers and stuff that are marketing other people's newsletters, I don't know why you keep doing this. I keep deleting your tweet, your comments day after day after day after day. Keep in mind, if you do shill somebody else's product, your message will be deleted. I don't know why you keep doing this, but I'm just going to keep deleting you. So, PMA for the win. Like I said, comments. If you want to be in the raffle, awesome. You saw that. Go look in the Twitter feed. The people that win the raffle, they're so lucky. And it turns out these people are actually really great karma people. So, obviously, it's fitting. But school programs there, and if we can make a positive difference in somebody's life through the raffle, then awesome. So put your name, rank, serial number, blockchain ID, because we're all gonna have one at some point. I wouldn't even be surprised if a country just automatically puts all their social security numbers, all their social insurance numbers, whatever you want to call it, right on the blockchain. Boom, you're already on the blockchain whether you like it or not. Anyway, that's a side comment. And in the comment, be sure to post something that you've learned out of all of this this rant of Brian's, just to make me feel as though I am actually being heard out there. All right, have yourselves a great day. All the best, and bye for now.